Hello, today is the 12th of February 2022. We always begin things with our disclaimer, so let us do that. It's my trading plan for the 14th when the market reopens. Remember, my calls can be wrong, they're just my opinions. Any trade one makes should be at one's own risk. Friday's pattern we call for one with the early high, which is this. Monday we're also looking for a pattern with the early high. We had a higher target 45.53.19. I thought it might not print and it didn't. The reason was that the weakness we hit Thursday usually gets followed through on the downside, and that's what happened. We get to cross an old price target off the list, 44.76.69, but we add some new targets, 45.09.87 and 44.86.49, which is also an ultimate MEJT target. And unless we gap down smartly, we're looking for these higher prices. This early drop was called unsustainable. We should retrace. We got an ultimate buy signal in the afternoon. This is also called unsustainable. System calls for these drops to be retraced. I view this action late Friday as a bottoming formation. We're dropping all day. Certainly retail customers aren't going to be buying lots of stock. You're dropping all day and liquidity's drying up. And after hitting new low and new low and new low, we closed over all those lows. So we couldn't make any progress in the last 2 hours of trading. A lot of potential purchasers of stock shut their checkbooks when we drop like this, but you're still going to have professionals who are willing to go long if they think they'll get their money back fast. And not going to be too many other people besides professionals who are going to go along into a drop like this one. The long-term count's still the same. We think we have much lower targets, but none of that requires us to go up on or to drop on Monday. We have a volume spike once again in the E-mini contract. These tend to be associated with lows in terms of time. When I see this, it doesn't pinpoint the low, but it's awfully pretty close. We're looking for signs of a low in this area. We're not certain this is the end of wave black B, but if it is, we've retraced half of this rally, and that's one place where you'll find Fibonacci support. It also was a retest of the prior consolidation. So as of now, it's a consolidation, a breakout, and a retest. And so there's this support in this area. Another way to find support is to look at the prior consolidation. You take some points, you set this at 38.2, it defines the low. If you look at Friday's trade, it's playing ping pong, Fibonacci ping pong, with the 38.2 and 61.8% areas. Another way to do this is to go like this. Doesn't hit the low exactly, although it does hit the close. And because of what I'll show you next, you don't really have to hit the low exactly in this pattern. It's an area to look for support. I don't think the count's entirely clear here, but there is a count with an ABC with good fibs, with an ending diagonal triangle right at the lows. And when there's an ending diagonal triangle, you don't have to hit all your fib targets exactly, because any one of these lows can act as your fib target. So we don't know for certain that's the right count. Something else might work. But if it is the right count, that low should hold and we should have a good rally. we should retrace at least to the origin of this wave A, which is way up here, around what, 44.90 or something, 70 points higher. And if it's wrong, we'll undercut this low. So the risk reward is certainly there, if that's the right count. Well, Monday's pattern has the early high. We could still gap down. These are the patterns we're looking for next week. Typically, it's a rally day with a final hour high, but if you fail, it's a straight line drop. There are higher MEJT targets, and if we don't gap down smartly, they're favored to print. As we revisit the area of last month's consolidation, breadth has improved dramatically, and the new highs, new lows have improved as well. This means fewer stocks are weak now than they were then. The volatility index has spiked over 30. The E-mini contract has a volume spike as well. These indicators that in terms of time, we should be near a market low and very likely a very decent, very tradable low. There is FEB support at Friday's low and the wave count compatible with the decline ending. The failure of late Friday action to follow through lower, if maintained at Monday's open, is bullish as well. Friday's bottom is a candidate for the low of this leg. If it holds, and especially if we gap up, we should have a good rally. None of this changes the bearish long-term picture, so any long position should be considered a counter-trend trade. We're looking Monday for the pattern with the early high. It tends to be a rally day. Wouldn't surprise me if we gapped up smartly, and gapping up smartly would be the ideal situation. We have higher targets. We have multiple signs of a significant low. And if I'm wrong, we should find out early. If I'm right, that price should hold. Try it again. If I'm right, that price should hold, and if I'm wrong, it should fall. But if it does hold, all signs are pointing to a significant move higher, even though it doesn't change a negative long-term picture. Monday's pattern is the one with the early high, and that is today's call.